let me tell you about the so-called Starbucks hustle. Now, this stems from the fact that non-banks participate in the payments system. Organisations that aren't traditional banks and don't even look like traditional banks are part of the payment system within the economy. For example, you can buy a cup of coffee from Starbucks without using money. Instead of handing over cash or a bank card, you can obtain goods and services from Starbucks in exchange for something else. You can use the balance stored in your Starbucks loyalty account. Starbucks accept that balance as a means of payment for their coffee. And this is a little graphic to demonstrate not only the fact that you accumulate rewards such as stars, but also the fact that your balance is typically denominated in fiat currency terms. When you look at your Starbucks balance, it will be in pounds and pence or dollars and cents. It doesn't need to be, but that's a convenient way for us to understand the value that we have and what goods and services we can obtain from Starbucks. Now, this balance that we have isn't what we would traditionally call money because it isn't generally accepted as a medium of exchange. You can't go to any other company other than Starbucks and use your Starbucks balance to buy goods and services. It's not money in the traditional sense. Also, you can't redeem it for money, so there's no place that you can go to get cash or bank card balances in exchange for the balance of your Starbucks loyalty account. Because you can't redeem that balance for actual money, there's no need for Starbucks to hold the equivalent of their customers' balances in a segregated account at a central bank. Starbucks are not a bank, they don't need to hold balances in reserve such that if their customers want to be able to convert that into different forms of money, they're able to do so. And the reason for this is because the only way you can redeem your balance is for coffee. Well, I guess you could do it for muffins or other things that Starbucks sell. But it's the goods and services that Starbucks sell that they're committed to giving their customers in exchange for their balance. If it was the case that Starbucks was willing to give you cash in exchange for your balance, if you could show them that your balance was £17 and they'd give you that in cash, then they would be acting like a bank and they'd need to have various forms of regulatory approval, such as having segregated accounts at the central bank. However, because they're only going to be able to give you goods and services in exchange for your balance, they don't need to, and because Starbucks have an almost limitless supply of coffee, this is a fairly good deal for them. Starbucks have the capacity to provide their customers with pretty much an infinite amount of coffee, and therefore it doesn't matter what balances their customers are walking around holding on their phones. Even if all of Starbucks customers want to come and redeem those balances, Starbucks have a good chance of being able to do so. Now, this seems like a pretty good deal, if you think about it. Starbucks aren't a bank, they don't need to be regulated like one, which is an incredibly highly regulated industry. As of 2022, they held $1.6 billion in stored value card liabilities. Around 6% of the total liabilities of Starbucks were these balances. $1.6 billion worth of money that's held in store cards that they need to redeem at some point for coffee, but not yet. In other words, Starbucks received a $1.6 billion in advance, which they can use for pretty much whatever they want. As long as they provide $1.6 billion worth of coffee at some future point, they have that from their customers in cash today. In other words, customers are giving Starbucks a free loan. There's no interest paid on this. We're not getting extra amounts of coffee the longer in which Starbucks are able to hold these balances for. This is a free loan that Starbucks receive from their customers. This seems like a really good deal because not all of those customers are actually going to redeem their coffee. Even that $1.6 billion may be sitting there as a potential liability that Starbucks may have to hand over in the form of coffee. They recognise that not all of their customers are going to do that. Certainly not the case that all of their customers are going to want to redeem it for coffee at the same time, but it's also the case that they won't all want to redeem it ultimately. This is partly because some of these balances are held on physical cards and those physical cards get lost or damaged. It's also because digital balances can get neglected. So even if you're holding the digital balance and it's there, you may forget that you have it. In 2018, there was $155 million worth of what's called breakage, which is those card values that are never redeemed or never claimed. This is $155 million that is not just a free loan to Starbucks, but actually free money to Starbucks that they never have to pay back. In preparing this lecture, I checked my balance on my Starbucks card, and as you can see, the current balance is £14.10. That's been the case for several years. It was only because I was writing this PowerPoint presentation that I actually thought to myself, I'll go and check what it is. It's nice for me to recognise that that £14.10 of coffee that Starbucks owe me, I can now go and reclaim from them. Starbucks are not the only non-bank that participates in the payment system. Starbucks are not the only company that provides services for their customers in the form of some loyalty payment or some kind of an amount that looks as though it might be considered money, but is in fact not. You can consider this spectrum whereby Starbucks are issuing balances that are denominated in fiat currency that's redeemable for coffee. You can imagine going to a fun fair where you have tokens. The fun fair can issue as many tokens as it wants. Its constraint is that it has to be able to redeem those tokens for rides on the fun fair. Because the fun fair has an unlimited supply of rides, then it can provide as many tokens as required such that they can service that for their customers. Those tokens aren't money because they don't circulate outside the fun fair and you can't buy them for goods and services. But they may be considered to be roughly equivalent, and you may kind of think about what the ratio of that might be. When the fun fair is in town, you might think that those tokens circulate at a kind of one-to-one relationship for fiat currency, and if the fun fair is out of town, presumably you could buy a lot more tokens for the same amount of money. Moving along the spectrum towards being redeemable for money, when casinos in Las Vegas issue chips, of course, you can't just redeem those for entertainment value, you can actually redeem those for money. So Las Vegas casinos need to be very careful that they don't create too many chips, such that they don't have the reserves on hand to be able to hand that over to their customers. When we get to something like PayPal, PayPal is obviously going to be a much more highly regulated organization than Starbucks or fun fairs in this space, because PayPal do make the commitment that the balance that they provide in your app can be redeemed into fiat currency. PayPal do need to have the capacity to be able to make those redemption requests. It's not always crystal clear what the distinction is between some kind of token asset that's redeemable for goods versus some token asset that's redeemable for money, but crucially, where companies lie on that spectrum will determine not only whether or not they're a bank in a traditional sense, but also whether or not they need to be regulated like a bank.